Good afternoon and welcome to the end of day review for today. And today is Friday, September 20, 2024. So basically it's the last trading day of this week, and this week is huge because it's continued to rally. It anticipates the Fed gonna cut, and it cut 50 point right there. So that's the huge cut right there, and the market jump because when it start on Monday, we already see it jump. So anyway, the FOMC is behind it now. The next event we're gonna look is, by the way, we are on week 38, so we close out week 38. Then we're gonna move to next week, which is week 39 right there, and then we have another 13 weeks to close out the trading year 2024. So basically, we are here now, and we closed out this week, the third week of September, which is going to close out the third quarter right there, and then we're gonna move to one more week. We're gonna move to the last quarter of the year, and the next economic event we're looking for is the GDP data on September 26th, Thursday, and September 27th gonna be the PCE data. So you have GDP data, and then you have PCE data right there, 27, 26. So there we go. We are all right. That's the economic events for this week, and we're gonna look at the charts now to see what is the market doing today. I mean, today, even though it's Friday, but the move is very clean. So either if we go right here, you see the setup right here, break, test from above. So it's reversal type 1 right there. You have a clear run right there. But we did not engage here because we're not in front of our computer. We at that time, so we didn't do the trade, but the setup is really clear right there. See that? Mark this high. That is the type 1 reversal break, test from above, then reverse. That's a type 1 right there. See that? That's a type 1. So the high of this is 70, 75. Yes, so we see that seeing the high yesterday around 1345, it started going down. You see it's open right there, and the rest is, as soon as it open, it create a gap right there, fill a gap, boom, it's going down. And you see the gap right here, fill the gap, and then it take the buy side, and then boom. So we can, right here is like a Judah swing right here until 9:30, and then boom. So right here we see the opportunity right here. We see this, right? You see that? See test from above 1, 2. It's gonna break this time. We did enter, but for some reason we're very nervous. We cannot stay in the trade long. We're gonna show you the execute later, but idea that we just tell you the roughly idea. Let's look at the quarter. So I mean, here's it, the quarter, right? Quarter for 3 quarter. No, this is monthly, not the quarter. It's monthly time frame. Let's look for the quarter. So we are about to close, close of September right here. September, right? It's monthly candle right there, and then right here we're gonna have the quarter. The third quarter start July and end in September. That's the reason why you see that it tell you the July right there, which is the month that open the quarter, and then this is April, and then this is January, right? So it start off the first quarter very strong. You have a pullback right there, just below the mid-range candle right there, right? Candle range theory is just below that. Then it's just test below that, it never break, and this guy also visit that again, but then boom, they all continue to go. So right now it's very strong. You don't see right here, it's supposed to be, this candle is supposed to flip. You see that setup, test from below and then break it and then reverse. But however, the break here is it not really a bearish at all. The break had to be very solid and then we consider reverse, but it's not, so it's still very strong. Bullish, we don't see any sign of bearish yet, especially now the Fed cut the interest rate, so you don't see anything. Let's look take a look at this candle. We're going to see what the half of this candle, right? 24 right there. So in January, let's see what is yeah, candle range theory right here, and this one is in 24. So we want to see this 2, and it's gonna be 240101. Let's see, it's gonna show up. Yes, so basically the mid-range of that candle is 5061. That's the quarter level right there. So 61, let's go with 61. Round them up to 61, round them down a little bit, yeah, 61. So we see that that is quarter, but that put is the candle range theory right there. So right there, exactly, it's just test that quarter right there. Wow. So now we can see that if we look at the high time frame, can give us some idea right there. So basically in April, all right, now let in April we have a pullback right there, try to break half of the first quarter. Here's our first quarter right there. First quarter right there, which is start in right here, first quarter, and then a pullback into half of the quarter. See that? But it failed to break through. It just retest and then it run away. That gives us some idea right there. Let's see on the daily. Right, do we see how it's impact? Oh, okay, it's the daily, yes. So it pulled back in, right here is the candle range theory right there also, or no, it this, yeah, right here, down here. 20, yeah, in April. You see that in April? Wow, look at that, beautiful right here. You see the setup, break, test from below and reverse right there. Wow, exactly right here also. Man, look at that, break, test from below and reverse. You see that happen in last, FOMC meeting in April in May 1st right there, and the day after that is follow through. It rally, it reversed right there, which is it happened this time also. It followed through. Actually, it's reverse. Yeah, it's reverse. Because the day before it's down close, and then on Thursday it reversed. Okay, so we can see that the idea of half of the candle, it really give us the idea how to trade in a low time frame when we use the high time frame right there. In this case, which is the monthly and the quarterly right there. So it looks like very bullish right there. So we have one more week to go to see if the close of this quarter or of the September month gonna be gonna make another new high, or it's gonna be close around here. So very interesting to see how it close out this month and this quarter. Yep. All right, now right here we do have the setup right here. Yeah, so this setup is really good. If we are in the front keeper, we should check this because we see the London range buy side of critical rated right there, and it's just below the open right there at 18 in Asia right there. So let's document this setup. So at 9 o'clock right there, at 9:30 it did retest that level. Okay, that level is start from 8:30. Yeah, that's one of the key level from the prior day, and it cut through the mid range of the London. That is the yes. So we're gonna aim for whatever low of this range right there, or on a high time frame we aim at this 4-hour time frame. If you look at 4-hour time frame, you can see that right here. It much more clear. You see that it tests, it break and test from above right there. So this we aim at this gonna be a retested level, and it did right there. So in terms of target, we can target right there if we follow through this. And if you can see that it's fairly gap right there. So basically it retests fairly gap. Okay, let's check this screenshot right there. So we have a setup right here. So it's and you see this candle also rate the buy side. So it gives you a very perfect setup that we need to engage. So basically we have break, and we have we have test from above, and then we reverse this. See that? That's the 3-step set of reversal. Yeah. So basically, all right, remember we trade this setup. For breakout at level, right? Whenever we say that a breakout, we have to give a specific level, because whenever price approach a level, then there are two possibilities. It's gonna be for breakout at that level, or gonna be real breakout at that level. All right, in this case is 50, 57, 75. So how we know they're gonna be a full breakout? Because we see the pattern, it break and then it tests from above. And then it's gonna reverse. But there's sometimes this setup is invalid. Basically the reversal step got flipped, it continues to go up. So that is the nuance, right? To play safe, you can put a buy stop right here, a sell stop right here, and buy stop right here. So in case of it flips, we can go long, and if it's short, then we go. If it's sell off, then we can go short right there. That's an idea. We call reverse type 1 right there. Basically, reverse type 1 have 3 steps, 1, 2, 3, or ABC right there. First, you have break level first, and then you have a test or retest. Because it already breaks, so you can call retest or test. In this case, a short setup is test from above that level, right, which is 57.75, and then you have reverse. Notice that right here we kind of reluctant, because we see that the buy side liquidity of the London range is, the sell side rate. But if we look on a high time frame like X4 or D1, we say that it have a huge pool of liquidity down, that it needs to go down. You see, here's the liquidity right here, level right there. You see this level X4, and also the level of previous day right there. So that's a huge liquidity. It's gonna go and revisit liquidity. So it have a reason to go down, sell off. So we notice that first thing is buy side London trend, buy side liquidity, which is the high right there, just get rated. And then we have a high time frame X4 and H4, which is what level? Which is 5675.75. I think the number right there, right? Hold on, let me see. What the number right here? Okay, 55.75. So if 57 55, 75 right there. That is the 4 time frame level right there. High time frame, X4 and D1, which is what level for D1? D1 time frame level is this one, the level right here. So it's 57.37. $57.37. So below, so it's gonna go down. That's idea. You see that it did hit the 57.37 right there. Is the on the daily time frame level. Yep. So this step is break. It's 4 breakouts. So it's gonna break the first, and then it tests. Second, it tests from above, and then 3, it reverse. Oh no, this one is supposed to be step 2. We missed the label. Okay, so this step is reverse. Yep. All right, let's save this one. All right, we just save it here, but we're gonna put in the daily time frame, so we have you see the target right there, we have a contact right there. So here's our daily time frame right there. See that? So we have a contact that it's gonna test that level. Yeah, so we want to remove this easy to wash. Let's remove this. Yeah, on the, we want to see the picture a little bit clear. It's not so clear here, so we just want to delete them. What is that? Okay, so we good. Let's delete this. Yeah, so we have about a picture right here. So this, we anticipate that the key level, this level on 4-hour time frame, and let's remove this also. We're gonna come back later. Yes, so basically we want it, on daily time frame, we're gonna hit this level and this level below right there. And we see right there. Okay, let's take this screenshot, and that is so basics right there. We have this is the level we anticipate right there. right? So basically we have X4 level and pivot tail level right there at 57, 55 and 57, 37. So the reversal right here gonna break down and revisit those two levels. Yeah, so it's better than that. Yeah, that right here. So we have X4 and D1. Liquidity pool or level. Liquidity, right? I think they call pool, liquidity pool, which is gonna revisit. So see that right there. Okay, I think that should be the annotation should be clear enough. All right, we merge those two screenshots together, so we have a beautiful write up right there. So basically, we have a 4 breakout reversal type 1 right here, and the entry voice is at 9 o'clock right there. You see how beautiful. And you look on the high time frame, you see right there, right? You see that it tests from below and break it. Then the next day, if we see the setup like that, you know, for breakout, it likely gonna retest that level, 57.37, or at least 4-hour time frame, you know, 57.55 level right there. So give us the perspective how the liquidity run right there. It should rate the London buy side liquidity, right? And then we see that below here on the 4-hour level and, you know, daily level. So it's have a magnet, it have a liquidity pool for it to go down and hit that level. So that's the logics behind it. Beautiful write up right there. Okay, now go back to other setup that we see. Okay, so right here we also see the setup right here. So because we trade at 9:30. So we mark that level. What do we see? All right, so look at the low 59.75. All right, so we see what? We see that it tests from above the level 1, and this guy is supposed to break it. But when you look in real time, it looked like it can break it, but it did not. You see a doji right there, and then this guy come back right here, it can break it. And that's it, the reason we go in and we did go short right there. Let's see how we execute this trade. Let's look at the recording we have. Okay, so you see that at 9:30 right there. So it looked like it failed to break it level. So it's tests level 1 and then it reversed. That's not the case for reversal, just remember that. But if we look at this level, we may see the reversal. If you look at this level, you see that is it tests and then look at the level. So we kind of not sure at 9:30 neither. That's the reason why we wait. Okay, so at this level, the low is 50. All right, 50, not So if we mark the level, what do we see? We see that is test from above, it break, then this one's supposed to be reverse, right? That's type 2 reversal right there. Test, break, and reverse, that's type 2. That is the type 2 reversal. Let's look again the model we have. So right here, that's our, our setup right here. So first one, is reversal type 1. The one we just talking about is called 4 breakout reversal type 2. This is right here. Test from above, break and reverse. That's what we have in mind when we see this at 9:30. We thought they're gonna you see that? Thought it's gonna be reverse type 2. And we watched, we thought, wow, it's so good, right? Okay, so good, right? But as soon as it closed like that, we said, boom, that's a signal for it to go short right there, because it's felt, because the reversal type 2 setup is invalid now, so we can go in and we short them.
18.
And we go in, we try to short them right there. Yes, so we short them. That's right, it goes to our boom. But I believe right here, all right. So what happened right here? Oh yeah, we go in a little bit late or what? I mean, our stop loss a little bit tight right there. Let's see what it happened right here. Okay. Oh, okay. So did it hit our stop loss? Let's see. Yeah, we're thinking about close position because we thought, wow, it have to flush, like when it fell, we have to fell real hard. But for some reason, it flipped back and it's scary us. So we close the short trade, we go long. I think we should not do that. But you never know, because at back we thought, wow, maybe the setups, the long setup still valid, because you see that is break and test from reverse, but it not reverse, it's test from below. So now it turned to type 1, break, test from below, and it's gonna be reverse. So right here, so when is at 9 right there, so we thought that, okay, so you see that it break, test from below, and this one gonna reverse. That's what we're thinking, which is fine. I mean, it's as long as we see the sub, then we pull a trigger. That's fine. That's good. That's mistake. We cannot blame ourselves, because when we read in the real time, is that what we see? Or now we review, we may see a bit different picture because this become a huge Dow symbol. But in the real time, is that what happened? So it's good. We just follow our setup. We whether it's gonna be good or not, then that's not right. But right here, we feel like why it not, going faster. It really a reversal. Normally it go very fast. So I think we close the long setup also, or our target are hit right here. Yes, so we are. We close out the trade. I believe we close or hit our target. Yeah, it hit our target. Is that right? Yeah, 250. Oh well. Yeah, so he got our target. First we short, and then we switch to long. If we stay with short, then we're still good. But anyway, now we go short right there, and we increase the that is the conviction we have. Okay, we say, wow, boom. So because we know that now it's have to be short right there, because that's the setup that you're gonna break this level. That's our conviction right there. So our initial idea is short, is valid, but we just a little bit nervous. So yes, so we get almost to break even right there, and we'll wait for another opportunity right there. That's fine. So yeah, that's the first two trade right there. All right, let's look at another trade we take. Yeah, here's a beautiful trade we take. Even though we did not go into our way, but it is a good way to learn, right? So basically right here we go along, because it looked like right here is the reversal. You see that it break and test from above, so this is gonna be reversal. That's the reason why we're go along. Perfect. We have a setup. However, it did not go along. It flipped a candle, then we turn to short. Perfect. That's right. And however, it kicked out. It just flipped back and forth. Then we switch to long again, which is perfect fine. Yes, go long again. But look at this. We're very frustrated at that moment. So what? Wow, just one candle. We lost two trades in a row right there. Yeah, but right here we start see something not right. So we close out the short trade right away. We jump to, you see that? We jump to buy right there. To short right away. We know that right here, because right here, this guy was supposed to continue this to go up, but it did not, and it turned into a short setup, which is the neck leg down right there. Right, here's the beautiful setup for neck legs down. We see the neck leg down right there. You see, we put right there. At that moment, we recognize this as neck leg down, because you see that the level right here, it break, it reverse back right away and test from above, and then boom, it's gonna make a second leg down. And before above that, you see the fellow graph. That is the signature of the neck leg down. That's which one we're going right away. But here's the thing: if we leave our target right here at 57.36, it will hit our target. But we get a little bit nervous, so we take out early. We get out. We close out early. Yeah, we close early right here. You can see that. You see that it will leave at 36. Eventually, it's gonna hit right there. Yeah, we move to right there, target right there. But you see that we get so nervous. We take out the profits right away. By the way, right here we supposed to close out a trade, but we mistake and hit the sell. In buy, we hit the sell right there. So, but anyway, but if we let it run, let me see. So when we move our stop loss to 56, right? 56, it never go back to 56. You see that? Yeah, 54 is the March. It never go back to 6, and then boom, it go down. We hit 36, 34. You see that? It will leave at 36. It hit our target right there, which is 3R right there. But that should be good for us. That is a beautiful setup. Trade right there. We're willing to change if the markets change the setup. Then we change. But a little bit crazy. But eventually we see the move. That it can be a neck leg down right there. We wish that we can recognize earlier, but you never know, right? That's the reason why you need to engage, so you can pay attention. Here is another trade that we took. So this trade is right here. We're thinking about right here, go early because we know reversal, but we go a little bit later here. We see that break and test from above, test from below, and reverse. That is the type 1 reversal right here. Type 1 reversal here. So it's break and test from below and reverse. So you see that break, test from below and reverse, and the time is about for it to 11:30 is the time for it to reverse after it make two leg down move, so it's gonna reverse right there. But we go look in a little bit late, so we don't have a conviction. But I don't know, for some reason this morning we less conviction. That's which why we move to break even right away, and it come back just around that level. If we put just below there, we still stay in a trade. It kick away, so it's just an even trade right there. Otherwise, we let it run. It will go all the way right there. You see that it go all the way up to the 9:30 at that level right there. All right, that's it for today. Thank you for your time and interest. We really appreciate. We're really grateful for this opportunity. We do what we love, and success is coming our way. Day by day, in every way, we're getting better and better. Have a great evening and great weekend. Talk to you later.